everyone, this is Ronica, tax advisor and CPA. In this video, I'm going to help you to understand the difference between a real estate dealer and a real estate investor. Over the past few years, or I guess this has been happening for a very long time, but business owners and a lot of clients as well are choosing to invest in real estate as their second asset class. And what I mean by this is you have a profitable business. Say for instance, you're an engineer or you have some other business that you're running. That business has started to become tremendously profitable and you have a lot of excess cash flow. So what a lot of people choose to do is to pick real estate as their second asset class to invest in so that they can increase their net worth as well as reduce taxes, because real estate is also one of those assets that you can use to reduce your taxes by investing in real estate the right way. So this is one of the questions that normally comes up between what type of real estate activity are you doing. Are you a real estate investor or you're a real estate dealer? As a business owner, eventually you figure out that being an investor, you're put in a lower tax bracket, that the more income that you can move over to the investment bucket, the lower your tax rate will be and the less tax that you will pay, because investors, the tax code is designed so that investors, they're the ones who pay less taxes. So who is a real estate dealer? So for example, you're going to buy a property, you're going to fix it and you're going to sell it. So regardless of what the volume of this property is, are you doing 1, are you doing 10, 20? It doesn't matter. But when you look at buying, fixes and selling in a short period of time and having property actively available for sale, this activity is considered a real estate dealer. If you're buying property, you're holding, renting, or something like that, and you're holding for a longer period of time, this is considered investing in real estate. And in this way, this is the investor category where you get the lowest tax rate when you sell that property or on the income that you're generating from that property. So why is this important? It's important to decide whether you are participating in real estate as a dealer or investor just because of these activities are taxed differently. They're still real estate, you're still actively participating in the real estate business, but the type of activity, whether you're going to be, buying, fixing, selling, or just buying and holding, you are taxed differently. As a real estate dealer, you pay a higher tax rate and you also pay self-employment tax because the government considers this ordinary income. As a real estate investor, then your tax is not ordinary income. You're not subject to any self-employment taxes, and any income or profits that you generate from your rental activity is get taxed at a lower tax rate. Plus, when you sell that property, then you get taxed as capital gains. So because both type of real estate activity carries a different tax bracket, if your goal is to reduce taxes, then you want to be very clear on how you're participating in your real estate business. So my tip for you is, if you find yourself doing both activities, there's absolutely nothing wrong with that, because sometimes you can be a dealer in order to generate a lot more cash flow in your real estate business and also use that money to invest more in the long-term rental. So there's nothing wrong with being a dealer. You just need to understand how you're taxed differently, so that when it comes tax time, you're not caught off guard or you're not completely in shock. So my tip for you is make sure that you're completely separating these things. You don't want to be running your real estate dealer, fix and flip, in the same LLC as you're doing your real estate long-term hold, because what will happen is all of it will get subject to the same type of higher tax. So you want to make sure that you're separating it. Also for your books and records, you want to make sure that you're separating it in your books and records so that your provider can identify what activity you are participating that is subject to self-employment tax and what activity is subject to a lower tax rate. So my advice is to always separate it, and if your plan is to continue to invest and reduce your taxes, then once you map out how many properties that you need to have and things like that, then you will see at what point you'll have enough real estate investment to write off your other expenses. I also have a blog article on this full real estate topic because I do get a lot of questions on it, and I address a lot of those questions, especially the 5 most powerful tax incentives that you get from being a real estate investor. In that blog article, I will drop the link below these videos, and let me know if you have any follow-up questions based on the information you just learned today. Thank you.